to the Investing Podcast, presented by Tusk Media. For a quick audio and video check-in on the stock market, here's the Stock Market Power Lunch.
Good afternoon, everybody. Welcome back to the Investing Podcast. Today is Friday, June 3rd, 2016. This is the Stock Market Power Lunch, and to really make it full effect, we got a bunch of hungry people eating right next door. So if you hear some loud crunching, don't worry about it. Everyone's okay. We're not under attack. It just happens to be lunchtime here at Narwhal Capital Management. We're going to wrap up the week with this video. We're not going to be back for the Investing Happy Hour. We're actually going to spend some time recording some long-form podcasts that will be out later next week. So we look forward to having those come out at you. So make sure you hit subscribe, whether you're on iTunes, Spreaker, Stitcher, YouTube, whatever. Make sure you're getting our content and make sure it's downloading automatically. It makes your life a lot easier and makes us feel special to you. So we're going to talk a little bit about the jobs report. That was a big storyline. We're going to talk about the market. We're going to talk about the Fed. Some big headlines today as the market is moving. The jobs report was really bad. Headlines, depending on how you read it, it's either disastrous or just the worst in the last 5 years. So not a good report for jobs. The expectation was that about 155,000 new jobs would be created. You don't have to be a mathematician to know that 38,000 is significantly less than 155,000. So 38,000 jobs was the number that actually hit. That was not good news, especially for us, because this morning we kind of made light of the fact that the market had somehow crept close to an all-time high. We even joked about having an emergency podcast party if the S&P 500 happened to rally about 1.3% or so and get to that all-time high. So we will now refer to this as the Great Narwhal Market Jinx of 2016 because the market is down for the day. Nothing disastrous, not exactly full panic mode or anything like that, but the Dow is down about 30 basis points. The S&P 500 is down about 0.5%. The Nasdaq's down a little more than that, about 75 basis points. So it is not super pretty. And the other thing that I said this morning that you could watch for is not just the jobs report, but what would people be reading into that jobs report, particularly as it relates to the Federal Reserve and interest rates. We've talked about this before on the podcast, but I think it was actually on episodes that we did not air. So it was during the test run of this show. So we'll talk a little bit about it here. One of the things we're seeing today is some of the biggest losers in the investing markets today are banks. XLF, the S&P 500, financial sector ETF is actually down about 2%, so down significantly more than the market as a whole. And a big reason for that is the connotation now that the Federal Reserve may not actually raise interest rates in June, which was kind of the consensus and the expectation heading into this month. So now it's sounding like maybe that won't happen because the jobs data was so poor in that reporting. Why does that impact banks so much? We use the illustration of blocks. If you picture a big box as the amount of interest that banks are having to pay, add another border around that, and that's kind of how banks make their money. So if they borrow money at one amount, they're going to loan money out at a slightly higher interest rate. So when that happens, they're able to expand that interest rate. And when interest rates get higher from the Federal Reserve, when they can borrow money at a higher rate, they can make that premium to you, the borrower, larger. So banks are getting hit because now that seems to be off the table, at least maybe until the fall. We'll find out what happens. Obviously, the Federal Reserve will probably come out and make a lot of non-committal statements, say some things that really don't matter. They'll be vague. We won't really know until the actual day whether they actually do or don't raise rates and hike them up in June, but now it's looking like that may not happen. So biggest losers for the day are the banks. A lot of them are down 4 or 5%. It's getting kind of ugly for those, and the markets are trying to kind of stabilize a little bit. And it looks like thus far that early morning punch in the gut that we got from the jobs report seems to have leveled off just a little bit. On the winner side, Broadcom is up about 3%. Newmont Mining is up about 3%. Gap is looking really well. So a number of names still performing strongly despite a market that's really kind of entering the weekend on a negative note. We will be back next week, as I said. We'll be back Monday with the Morning Market Mimosa. We'll hit you with 3 podcasts and videos throughout the day, and we'll have some long-form stuff during the week next week. So again, hit subscribe, leave us a 5-star review. We'll read it on the air. Make sure you have a great weekend. We'll talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.